Hello, fellow traders. Welcome back. I have very, very busy for the last 2 weeks. So, well, it is the year-end madness at the day job. During my return back to YouTube, I discovered a news that was surprising, or maybe not so much. FTMO has banned US traders. So, the news is that, and I will quote, um, since the establishment of our company, our goal has been to provide top quality services for our clients. Unfortunately, at present, we are unable to do that in the United States due to specific conditions of the market segment. Therefore, we have decided to suspend the purchase of FTMO Challenge for our new and existing clients, just as we put a hold on onboarding new US clients. Right. So, what does this mean? Well, it means that any current or new US FTMO traders are not able to purchase any more new challenges. I believe they are not discontinuing it for any existing challenges, but it's only for new purchasers. So, why does this happen? Well, the theory is that because FTMO has decided to do a preemptive move to stay abreast of the US law, they do not want to be the next target of the US law regulators, just like my Forex fund. Let's take a look at US history with CFDs. In fact, since 2020, US traders were banned from trading CFDs by the CFTC. Why? The reason for this was because CFDs are unregulated, as these are over the counter products and not through a regulated exchange. Means that it is between the traders and the brokers. Traders doesn't own the underlying asset. This lack of transparency can lead to potential risks for investors, such as price manipulation. The US doesn't really like this because they would like everything to go through an exchange so that they can regulate everything. Of course, this is the US. But because of this, US traders cannot trade CFDs through act of law, which is quite a shame because CFDs actually provide quite the access for traders to trade a lot of different instruments for very low margin requirement, which is also the reason why it is deemed risky by the regulators. So US traders sought alternatives, which include offshore brokers. Uh, that itself has a lot of stories, which while I do not have any issue with offshore brokers in the past, there are many cases of fraud and inability to draw money back from the offshore brokers. So an alternative, someone wants to go to trade CFDs, would be to go to forex prop firms, because essentially these prop firms are still allowing US traders to trade CFDs through them. And that is why you, as the trader, are using platform like MetaTrader if you are trading through the forex prop firm. It's just a layer of pseudo legitimacy by trading via a prop firm. However, after all, loopholes are meant to be patched. The situation of US traders now is that the law says you can't trade CFDs, but you find another way around to skirt this by trading via prop firm. And the regulators might have overlooked this in the past few years, but now there are signs that they are looking over at the prop firm industry. For now, there is actually no cases involving prop firms. I think FTMO is just taking a precautionary measures. They do not want to be involved with US regulations, so they are cutting off US traders to prevent the US laws from reaching towards them. If they are not involved with US residents, under what reasons will they be involved with US law? But if that's the case, then how else are you supposed to trade? It's actually quite easy. You can just stop trading CFDs or any proxies such as forex prop firms. For US traders, what are the alternatives? First, you can actually trade with your own capital. They are still offshore brokers, though I might not recommend any here because it could be illegal for US traders to do so from US soil. However, there are some regulated brokers that you can search for. Another option is to go to trade futures or go through futures prop firm if you want to trade via prop firm. Essentially, a lot of the tickers that you are trading in CFDs can also be traded via futures. It's just that you have to adjust the tick and lot size calculation to adjust it. For example, S&P 500 is equivalent to the S&P 500. NAS 100 is equivalent to Nasdaq 100 futures, NQ over here. And if you want to trade energy futures, there's crude oil. You can also trade currency futures, such as AUD USD, BP USD, Canadian USD, Euro USD, and Japan USD. See that they all have the symbol like 6A, 6B, 6J over here. The downside I see here is that the trading pairs are all against US dollars. So for the more exotic pairs, it will be difficult to trade through futures. There are also metal futures such as gold and silver available for trading. So this news doesn't mean the end of the world for the prop firm world, just that you have to be more selective. And to be frank, I don't think the futures prop firm will be affected as much by the impact of the forex prop firm. Essentially because the futures or the instruments they are trading are regulated. If you see here, all the instruments for futures, they have an exchange here, meaning that you are actually trading in a fair market, a gentleman's market, such that they are bid and asked by actual traders in the exchange. And all the trades will go through the exchange. Even if the prop firms are just using simulated accounts, they are still picking prices from the exchange, making the price fair for the traders. Whereas for CFDs, it is actually determined by the brokers, which makes things accessible for fraud or some hanky-panky slippages. Well, there you have it. FTMO banning US traders. Not a big deal for US prop firm. There are alternatives for forex prop firm, and I think FTMO is just trying to be safe for now. Well, goodbye and see you next time.